Hey everyone, welcome back. Ready for another deep dive?
Definitely.
So it's this English learning podcast called Daily Money Briefing.
Huh. Interesting. Okay.
It's actually pretty cool. You get the
Yeah.
financial news and kind of a language lesson all in one.
Oh, I like that. Sort of killing two birds with one stone.
Exactly.
So today on the deep dive, we're going to try and filter that down a bit. We've picked out a few key global financial stories.
Mm-hmm.
The idea is to give you the essential insights, quickly and clearly. We've got three stories, kind of distinct, but as we'll see, maybe interconnected.
Right. So we'll be digging into South Korea's updated growth forecast for 2025.
Yeah.
Then there's the pretty significant drop in Tesla's latest profits and what that did to their stock.
Big news there.
And finally, China's new rules around exporting rare earth elements, which is, well, important.
Definitely. So our mission really is just to pull out the main points from these, talk
Yeah.
about why they matter, and I guess why you should probably have them on your radar.
Sounds like a plan.
Okay, so let's kick things off with South Korea. What's the headline news there?
Okay, so the main thing is their finance ministry has lowered the economic growth forecast for 2025. They initially thought 2.2%.
Right.
Now they're saying more like 1.8%.
Okay, 1.8. That doesn't sound like a huge drop on paper, but I guess in economic terms.
Well, exactly. It might seem small, but it points to some pretty significant underlying pressures. South Korea is a huge player, especially in manufacturing globally.
Sure, electronics, cars.
All that.
Yeah.
So a slowdown there matters.
And do we know why they've revised it down? What are the factors?
Firstly, sluggish exports. They're just not selling as much stuff overseas as they'd hoped.
Okay.
Then there's growing concern about household debt, people owing more money, which, tends to put a brake on spending.
Right, less disposable income.
Definitely. And another big one is China.
Ah,
China's their biggest trading partner, and the recovery there seems maybe weaker than expected.
so if China sneezes.
South Korea feels it, yeah. Their finance minister, Choi Sang-mok, basically said that global uncertainty and high interest rates are heavily impacting domestic demand.
Global uncertainty, high interest rates. Sounds familiar.
It's a common theme right now. And it feeds into things like consumer confidence dropping. People get nervous, they spend less, businesses get nervous.
They invest less. Right.
Exactly. So it's kind of a cycle. It suggests things are cooling down in a really key part of the global tech supply chain.
Okay, so let's connect that back. For you listening, what does slower growth in a place like South Korea actually mean? What are the sort of real-world effects?
Well, typically, a lower growth rate can mean a tougher job market.
Okay.
Fewer new jobs being created, maybe wage growth slows down.
Mm-hmm.
Businesses tend to get more cautious, so less hiring, less expansion.
So kind of belt tightening all around.
Potentially, yeah. Both for businesses and individuals, it's just a signal the economic weather is getting a bit cloudier.
Okay, that makes sense. So shifting from that sort of big picture economic view in South Korea, let's zoom in a bit. How are these kinds of global pressures hitting specific companies? And Tesla seems like a really interesting case study right now.
Oh, absolutely. Their recent Q1 earnings report,
Yeah.
it definitely made waves.
Yeah, what were the numbers?
The big figure was a 51% drop in profits compared to the same quarter last year.
Wow, 51%. That's hefty.
It is. And the market reacted pretty strongly. Their shares fell over 8% in after-hours trading right after the announcement.
Ouch. So investors clearly weren't happy. What's the explanation from Tesla?
Well, CEO Elon Musk talked about economic headwinds.
Yeah.
Similar themes to what we just discussed.
Right, the global uncertainty again.
Exactly. And also specifically slowing demand for EVs, especially in big markets like Europe and China.
So the EV boom is maybe cooling off a bit?
It seems that way, or at least facing more challenges. And it's not just the overall economy. Tesla's also dealing with much more competition now.
Right, particularly from China.
Yeah, Chinese EV makers like BYD are becoming really significant global players. They offer compelling cars, often at lower prices.
Mm-hmm.
And beyond that, there's maybe just a bit of a softening in consumer interest, specifically for the high-end electric vehicles right now.
So maybe the early adopters are satisfied and the broader market is more price sensitive?
That could be part of it.
Yeah.
It suggests that maybe the premium EV segment has hit a bit of a plateau, at least for now. Even market leaders like Tesla have to adjust.
And I saw something interesting. There was talk about Tesla maybe cutting prices again to stay competitive.
Yeah, that's definitely being discussed.
Which sounds good if you want to buy a Tesla, I suppose.
It might look that way initially, yeah. Lower prices could certainly help boost sales numbers.
There's always a but, isn't there?
But if they cut prices too much, it squeezes how much money they make on each car.
Right. So sell more cars, but make less profit on each one.
Exactly. And that continued pressure on margins is something investors will be watching very closely. It's a really tough balancing act for them. Keep sales up without killing profitability.
A tough balancing act indeed. Let's shift again to our third story, which takes us into international trade and really geopolitics, China and rare earth elements.
Yes, this is a really interesting and potentially quite impactful development. China's brought in new licensing rules for exporting rare earth elements.
Okay, first off, maybe a quick reminder, what are rare earth elements and why do they matter so much?
Right, so they're a group of 17 metals, things like neodymium, dysprosium, but they are absolutely essential for a ton of modern technology. We're talking powerful magnets in smartphones and wind turbines.
And electric vehicles, connecting back to Tesla.
Exactly. Critical components in EV motors, too. Basically, lots of high-tech and green tech applications rely heavily on them.
So China putting new licensing rules on exporting these. What's the thinking behind that? What's the interpretation?
The widespread view is that this is largely a strategic move, geopolitical.
Tied to the whole U.S.-China tech and trade tensions.
Precisely. It's seen as China using its leverage. They dominate the global supply of these materials.
Right.
So controlling the export gives them a strategic card to play. It's a reminder, really, of how dependent the rest of the world is on China for these critical inputs, and maybe it's aimed at pushing companies to source elsewhere or maybe influencing negotiations.
And what are the potential consequences then if China tightens the reins on these exports?
Well, experts are flagging the risk of disruption to global supply chains.
Makes sense. If you can't get the key ingredients.
You can't make the final product, or at least it becomes much harder and more expensive. So manufacturers who rely on these rare earths could face real challenges.
Which could mean higher prices for us, for consumers buying phones or cars.
That's certainly a possibility, yeah. It could trickle down and lead to higher prices for a whole range of high-tech goods.
And it's worth remembering, isn't it, that this isn't exactly the first time China has used its position in the rare earths market.
And they control something like, what is it, around 70% of the global mine supply?
70%. Wow, that's huge dominance.
It really is. It gives them significant influence.
So the basic economics are pretty simple here, I guess.
Fundamentally, yes. It's supply and demand. If you tighten the supply of something essential,
The price tends to go up.
exactly. And because these elements are used in so many different industries, worldwide, electronics, renewables, defense, these export controls could potentially ripple outwards and have pretty broad effects, maybe even inflationary ones.
Okay, wow. So let's just quickly recap. We've looked at South Korea's economy facing a bit of a slowdown, revising that growth forecast down.
Then Tesla dealing with falling profits, more competition, pressures in the EV market.
Right. And finally, China asserting more control over the export of these really vital rare earth elements.
And what's fascinating, I think, is seeing the connections, even if they're not always direct lines.
Yeah, how so?
Well, you see the global economic uncertainty hitting South Korea's exports and maybe contributing to slower EV demand affecting Tesla.
Right.
And then China's move on rare earths could directly impact the cost and availability of components needed for those very EVs and other tech manufactured in places like South Korea. It's all tangled together.
It really is. Which leads to, well, that wraps up this deep dive. Hopefully that's given you a clearer picture of some key economic stories playing out right now.
Hope it was useful.
Until next time, keep digging deeper.